Let's talk about how to determine a particular lot size to use on a trade. We all understand that as a forex trader, understanding pips calculation, it is very, very essential. A pip is the smallest price movement that an exchange rate can make in the forex market on a particular time frame. Each instrument you are looking to trade, whether it's currency pair, commodities, indices, cryptos, stocks, futures, or volatilities, they have their own pips movement different from each other, and that is because of their price structure and the volatility. Now, some of the assets are very, very volatile. That is to say, they move very, very fast, while others are less volatile. That is the reason for different pips movement. We are going to only focus on pips calculation for currency pairs. What is the step? What's the first thing you are supposed to do? I'm going to do this pips calculation in different ways, applying some constant formulas. Now, the first thing first, after funding an account, is knowing your risk, which I call risk tolerance. So before pips calculation, right, you must first understand your risk. After funding an account, you must have gotten a setup that you want to trade. This is actually for people that already understand how to analyze the market. Let's use this as an example. Maybe this is what I want to trade, and I must have analyzed the market, and my stop loss pips is 11 pips. So this is what I want to do. I want to do a pips calculation using different methods. The first one is in a tabular form. I will have my account size, which is what I funded. The next thing is knowing the amount I'm ready to risk, which is my risk tolerance, which is what you are ready to risk to the market from your funded account. And after that, the next thing is knowing your stop loss pips. For instance, I have 11 pips on my position size. So I will indicate that stop loss pips. Then the next thing is to know my pips value. The pips value has to do with amount you are making in dollar per pips movement, or the amount you're losing per pips movement. Every lot size has its own pips value. The next thing after your pips value is your lot size, which has to do with the volume of your trade. Your lot size is determined by your risk tolerance, and it is not by your account size. Because a trader with $100 account can decide to risk $40, which is what? 40% of the account. And someone else with the same account size can decide to risk $10, which is what? 10% of the account. And I've seen a lot of people doing a full margin. All of these things is actually by risk tolerance. So now, we want to get into how pips is being calculated. From the account size, let's say for instance, what I funded is $200. And then my risk tolerance personally per trade is $20. My stop loss pips from what I've gotten earlier is 11. So what I will do is put it down as 11. How do I now determine my pips value? How much I will make per each pips movement? We have a constant formula to use to determine your pips value is amount at risk divide by stop loss pips. Now our amount at risk is $20, and 20 divided by 11 is equal to 1.8. So we are going to put down 1.8. 1.8 is not going to be our lot size because 1.8 is a standard lot size. Definitely, if it goes against you by 11 pips, you are going to lose $198, which is not what we are ready to do. So we have a 1.8 here. So this is a standard formula if you are looking to do a pips calculation for currency pairs. After I must have done this, the next thing I'm going to do is use my pips value to determine my lot size. Another formula we'll have. So we have another formula to determine lot size now. The formula says lot size is equal to pips value divide by a constant number of 10. And that is to say, to determine our lot size now, P's value is 1.8. It's going to be 1.8 divided by a constant number of 10. 1.8 divided by 10. 0.18. So now our lot size is going to be 0.18. Now, how do we determine our target? Our target can either be determined by take profit pips or using the risk reward ratio. How do we do that? So if you check this analysis here, you will then figure out that we have risk/reward ratio. This is the ratio of how much you are looking to risk to the market to how much you are targeting in the market. The risk is determined by you, and the reward is only seen after you project your position size. We have projected our position size. Now, for we to know our reward in the market, the next thing to do now is to multiply our risk by the ratio of the reward, which is 4. That is going to be 20 that we are looking to risk multiplied by 4 for we to determine our reward, which is our target. That is the first way to do it. Now, the second way to do it is multiplying the pips you are targeting, which is 44, by your pips value. The formula to use is equal to take profit pips multiplied by pips value. The take profit pips is said to be 44, which is equal to 44 multiplied by 1.8. And that will eventually give us 79.2. If you are cool with putting $20 at risk to target 79.2, then it's a good trade. To me, it's a good trade. So this is almost times 4 of what you are risking in the market. The reason we got this is because our stop loss pips is not a random whole number to give us a particular random whole number as pip value. This 1.8 was actually approximated. Do we get that right? That is what it is to do a pips calculation. And this should be repeated for every currency pair you want to trade. Apply these formulas. This is the first step to calculate your lot size. Now, the second step is very simple without going through all of this stress. To do the second step right, you must have funded an account, you must have gotten to know or determine how much you want to risk to the market according to your risk tolerance. You must have done your analysis to know your stop loss pips. You must have gotten to know all of this before you start. So what you need to do is do this simple step. Amount at risk divide by stop loss pips. Then divide by 10. You say lot size is equal to amount at risk divide by stop loss pips divide by 10. Our amount at risk is equal to 20. Then we divide it by stop loss pips, which is 11. Then we divide it by a constant number of 10. This number is not gotten from anywhere. It is constant. And that will give us lot size now. So amount at risk divide by stop loss pips divide by 10 will give us our lot size instantly. 20 divided by 11 divided by 10. So we are automatically going to use 0.18, which is a mini lot. In the next episode, we are going to do a trading plan, and it is advisable as a forex trader for you not to look at forex as scam or trade forex like a gambler. You must apply this risk management and trading plan. In our next class, we'll continue. Thank you very plenty. God bless me, bless you. You're welcome to Solid SMTFX.